Ingenuity knows no bounds. That does the most impressive technology.
G'day, mate.
You work without limits.
Hey, buddy.
How's things?
Oh, I'm all right, mate. Sorry, I forgot about the link.
No, it's all right. No drama.
I've already had a bad day. Those footsie's absolutely taken off, and I've got to try and find a way in.
Yeah, it reminds me of Tommy Steele.
What a picture.
Yeah, what a gap. Poor chap.
Yeah, huge gap, which I might try. The gap is my first point of call. That's probably all I've got. I've got to try and at least get that price, but I think it's going to be tough.
Yeah, that doesn't look like an easy chart to contend with at all, does it?
No, I mean, I think it's just one of those things that you got to get in and accept that it's going to be a wide stop on it, but not getting in at a really dog awful price, which is basically where we are now, is a really bad price. So I don't want to get in here, but if it could just come back down to that gap, then I'll give that one a go. I don't think the gap's going to be filled today. I think this is the point. What's that, mate? Sorry.
Would the
Oh,
trend
the
line
trend
do
line.
you?
Well, the problem with the trend line is that it's kind of, it's not really a trend line anymore because it got broken down. I mean,
Yes, I
yeah,
see.
it might come back there, but the gap looks to me like the most obvious point. If it was to come down, well, to be honest, the trend line's fair. Well, depends what time it happens, I suppose. But the trend line is going to be fairly close to the gap anyway. I think if it comes down to this price and gives me a sniff, then I'm just gonna buy it, and I'm gonna put stops right under here and just see if I can travel up, because my you know, that 72.20
Yep.
is I think is now on, and I think, you know, getting in around about here and then just leaving it run and see if it can just kind of float to the upside is the best point to call.
So there's no thought that the market is kind of overreacted, or?
I don't think so. I think this is what we've been waiting for. I mean,
Yeah,
they've been
okay.
waiting for that. I mean, there was one opportunity on Friday, but Friday is such a difficult day to trade, especially before a huge world event. Because what if that deal doesn't come in and it gaps the downside?
Sure. Is there a deal?
Well, Trump has basically he's accepted not to put any more tariffs on China, and China are going to be buying more American goods, I think.
But
So
didn't he actually say this goes on hold until?
yes,
So
that's
really,
the bottom line.
yeah. So really, there's nothing to stop him, as he can do and as he does, going back and saying no, to hell with that. The
Yeah.
25 cents back on the table.
Well, I think that's
But
probably going to
until
be
he
the
does,
case.
I suppose, yeah.
That's the point. That's the point. I think, you know, and the point is until he does, and I think that we've got every chance of at least getting up to this point here. So that point there is, well, it's currently about 70 pips away, which is it was a pretty nice margin. The problem is that you got to have a stop of about 100 and, well, probably about 150 pips, but not that you would let it come all the way back down there again. But you've got to allow for a few fluctuations, I guess. You know, it's going to be hard to kind of pick a point to get in where it actually stops and you know, sticks with it. But the other thing that could happen is it could just take off and then, you know, get to that point before there's any chance to get in, any really nice chance to get in.
Yeah, I don't feel particularly comfortable right now, and you know, I'm not really liking what I'm seeing, because before this announcement, everything was looking pretty clear to me. In fact, it was looking, I was feeling pretty comfy with reading the market, but this has thrown a little bit of a spanner in the works for mine. And because I don't really think anything has changed that much, I'm still tending towards where we were before this announcement. But it's tough because the market's not reading it. Well, I'm not reading the market reaction that way. It's a little bit tricky.
Yeah, do you know, the way I see it is that we probably oh, that looks all right, doesn't it? We probably were pricing in worse, and I think what's basically happened is that now we've got better. The market will, yeah, that looks quite good there actually. Yeah, I think that the market was probably pricing in worse, but now we've got the deal. I think that the market probably is a bit cheap down here. Certainly the FTSE anyway, but you know, have you seen oil as well? Oil is absolutely flown.
Yep, Aussie's gone.
Do you know, I saw it as soon as the market opened last night, and I saw the Aussie gap forward. I knew that the FTSE was going to gap, and it was going to be tough, you know, to try and get in.
Yep.
The Aussie's a bit different because it's over.
I'm really not. I've got to say it, and I'm being honest. I'm not interested today.
Oh, you're not. You're just going to stay, give it a wide berth.
I think so. I'm trying to, you know, put two and two together here, and I'm just coming up with an answer I don't like, and the answer is I've got to go back to where it was, and that's just such a ballsy move.
Yeah, do you know what?
To go back to Friday, you know.
I think you're right, but my argument is going to be that that this gap needs to be filled, but we know how long it can take, and my personal stance on this is that we could get the Santa rally, you know, for December. This was last week's bar. We get the Santa rally for December, so we have a decent December, maybe up to this point here. And then back in January, then we start to look for selling opportunities. But I think for this month, we don't fill that gap. I just can see that if the trade tariffs are just left as they are, and Trump doesn't kind of shake the nest at all, then we look for the long. The question more is the fact that if we're looking for longs for the whole month, do we really need to be getting in on a Monday with a terrible price? So I think that if this starts to take off today, it's going to have to be left and then see if maybe gets up to this point, maybe that little bit higher. Then we start to drift back down again, create some support, maybe into the rest of the week, and then we start looking for the long, because that still will have enough time. And at that point, at least we got a little bit of a better place to put stops. But I think, I'm a little bit, I'm the same as you in as much that I think that we are going to be coming back to the downside, but I think we could potentially rally for the whole month this month, and it's just trying to find a way into the upside before coming back down. What do the euro look like?
Yeah, look, it's still a question mark as far as I'm concerned, because it hasn't taken out the high even of Friday, and it's still underneath last week's weekly pivot. So yeah,
were you in the euro yen?
Yeah.
You were. Are you still? You're not in that anymore, right?
Not now, no.
No, because that was amazing. The move to the downside on that one.
Well, I was waiting on that one, of course, but yeah. Thanks, Donald. You prick. Did it again.
Yeah. Do you know what? I thought this would happen.
I mean, we made money on it. A little bit of money on it, but it could have been a lot worse, actually. Had that gap been, maybe another 20, 30 pips, we could have lost money on that one easily.
Yeah.
But yeah, out at break even trade, I suppose, a little bit better than that because we closed 55%. But yeah, disappointing, because I thought this was going to be a good trade.
Yeah, I had a feeling. I didn't know how the euro would connect with it, but I had a feeling that certainly the FTSE was ready to go, because the thing that was happening with the FTSE for the whole of the last week was that it was getting shoved down and shoved back up again, shoved down and shoved back up again. The issue at this point was that it broke down a 4-hour chart. This is on the 4-hour. It started to break down at this point here, and there would have been people, with a not a particularly strong signal, but there would have been people that would have been thinking, okay, maybe we can short this here. But what I was looking for the long today, but what I was hoping is on the hourly that it would just come and tuck in here a little bit, and then we could start to move to the upside. But I suppose it's inevitable on a bigger news announcement that just is not going to happen, and you just end up getting that gap, that emotion.
Yeah, they're not going to let us plebs in.
No,
the market was always going to gap over the weekend. It was just a matter of which way.
Yeah, exactly. The only thing is that when I look at this is oversold. I mean, it's overbought, but it is embedded. And that just kind of says that beware getting in at these highs, because yes, if you've got the account size to be able to get in and hold, that's absolutely fine. But that particular play would be so dangerous at this point because of this. It suggests
there's just no value, is there?
No, there's no value. Yeah, there's no value. I mean, yes, that there's money to be made just putting in a buy here and letting it fluctuate, because I think we'll go through this level at some point, but it's just it'd just be very, very dangerous to try and trade it like that, and we'd be much better off seeing if we can drift back down again, and then moving to the upside. But my God, you'd have to be clear-headed to be buying this on Friday. This bar was really good,
Yep.
but you'd have to be clear-headed to buy that bar on Friday, and pretty confident as well that that there would be enough in the market to suggest that there would be a deal. But the technicals actually did shape up for that, because you know when we kind of look at the daily, and this is the difficult thing, that the daily chart had sort of like, you know, already suggested that we were going through, but the problem was that we did go through, but we didn't go through with any confidence, and then ultimately we ended up failing. And these are the worst type of lines to get in. You know, when you got a kind of sloping trend line.
Been violated many times as well.
Yeah, well, it has. Yeah, it didn't close, but yeah, but you know which one do you go for? This one, and you get lower,
Yeah.
or you know, or this one and you get lower. It's just so tough. You know, you'd have to, as I say, you'd have to be pretty confident that you were right on the direction of that one. And you know, if you were confident on the direction, then fair enough, you just buy and hold it. But as I say, account size would have to be fairly seismic to be able to handle that.
Yeah, not my cup of tea, I'm afraid. A little bit peeved that the Aussie's gone. I was waiting for a long there, but couldn't get the price. Same as you. You know, the Aussie now is untradeable for me, completely untradeable.
And isn't it interesting that, you know, when it comes down to it, we sort of always hear the arguments between technicals versus fundamentals, and this is a fundamental trade, undoubtedly a fundamental trade. Yep. And you know, in this particular scenario, at this particular point, the fundamentalists have won out.
But the good part is they'll always come back to the technicals at some stage.
Yes, they will, and that's the key, isn't it? Is that you know, yes, we want to be looking for a long, but we need something. We need some scraps thrown for us to give us that opportunity. But
yeah, look, sometimes it doesn't happen either. You know, it can just go and go and go.
Yeah, and I suppose
and you're left without anything to hold on to.
Yeah, well, the thing with it, when they go and go and go, you know, those particular moves in the market are the ones that we would love to be in, but we don't have to be in, because you know, eventually the technical pattern will shape up again. So it's not a huge issue, is it?
Look, the rules are the rules, and if you've got some, you've got to play by them. It's as simple as that. And if you don't, then you're probably playing some other game. It's not call trading. It's something else.
Yeah.
So yeah, look, this is just one of those days for mine where I have to think, okay, long odds on to go longer.
Yeah.
But you know, how much? You've just said it. You know, how much do you want to risk?
Yeah.
To actually achieve what eventually will be a technical level, and it will come back off a technical level. There's nothing shorter than that.
Well,
and
it's two things.
That's the one you got to look for.
It's two things, isn't it? It's number one, how much do you want to risk, and how big is your appetite for you know, because if you know, from my perspective, if I've got a target of around about 100 pips higher, that's absolutely fine. But am I prepared to sit through a dip, you know, a possible dip, I should say, you know, a vicious dip, and all that? And yes, I am, but only if I get the gap. I you know, that is still going to be pretty vicious from that particular point right the way back down to here again. I mean, if I do a measurement on that, I mean, that's 60 pips, and the low down there is 100, and you know, the low down there is about 100. So it'd be okay to get in at the gap, because there'd still be enough risk to reward. But yeah, I mean, I wouldn't be prepared to get in here as much as I think it may well go here, and even if I did get in here, I do believe it's going to come back. I don't really want to have to sit through any specific dip to come back to it. So you know, what do? You have to sit on your hands. But isn't it interesting that Friday as well has been the most significant day in the market. It's certainly for the FTSE 100. The Friday has been the real opportunity in the FTSE for the last 2 weeks.
Yeah, a bit of a bugger, isn't it? That's day you meant to play golf or something like that.
Yeah.
Not trade.
Yeah.
Yeah. Look, I think everything goes, in turns anyway. It's just like the market when you're thinking of day to day. Oftentimes you'll find that, in fact, most often you'll find that Asia doesn't move much at all. But then, in 1 week, it might be the only session that moves.
Yeah.
So, these things happen, come and go. It's very, very difficult to say, okay, for the next 6 months, Friday's the day to trade, because probably that won't be the case. But, the stars have lined up that maybe the last 2 Fridays have been great to get in. And I guess, you can look forward and say, well, okay, we've got a big announcement coming up. We've got a big meeting coming up. Something's going to happen. And if you do have an opinion on that, then maybe it is a good idea to just, put a little bit on the table and ride your luck.
I'll tell you I agree. Actually, let's quickly get to what may give us an opportunity again in the market.
Well, there's a few things happening this week. We've got the first week of the month, of course. That's NFP. Work backwards from there. You've got Carney speaking again tomorrow. You've got what else is going on around the place? Draghi speaking as well.
Oh yeah, okay. So I've got so nothing today. So that probably leaves the market in a buying situation. What's Carney talking about tomorrow? Due to testify along with the 3 Bank of England deputy governors about the Brexit withdrawal agreement. Wow. Okay, yeah, that's going to be interesting.
Yeah, there you go.
GDP from Australia, so that could cool that off a little bit. Actually, they're aiming, the forecast is for less than the previous. That'd be interesting. Canada, I don't really mess with. And OPEC meetings, interesting. That could doubt a little bit of the excitement with oil. Powell speaking. And then, as you say, non-farm on Friday.
Yes, there's a bit going on. There's every chance that this will retrace, I believe, anyway.
Yeah, we got to play that, haven't we? GDP next Monday as well from the pound. CPI, so that's always a good one from the pound. But do you know what? This is the key day, the 11th, and it wouldn't surprise me at all that let's look at the pound, because the pound might well give us a selling opportunity. As this one moves to the upside, because of the thing with the pound, the interesting thing with the pound is that that vote is now not too far away, and we have CPI and all that sort of stuff as well, which may well play a part.
Yeah, and it's still marking time, really. At the end of the day, there's not much happening there.
No. So where do you get in at the pound? This is the thing.
Oh, look, pretty clear now for me. There's monthly pivot, like it has been. Just off a pivot. That's all I'm looking for.
1.288. So that gives us somewhere around about that high there, which looks pretty good, doesn't it? So a couple of days of upside, and then we get some orders coming in the market there. And then I think we come back down again. And what will be interesting is, where do we come back down to? This lower level, or do we come back to this shelf? But I like that. So let's aim for monthly pivot. We're looking at a monthly pivot for a potential sell on the pound, whenever that happens. We can look for signs and signals. And I think we just be brave, don't we? Just get in at that point and see if we can get ourselves lower.
Yeah, look, that might even happen today, mate. That might set up tomorrow.
Yeah, do you know, I wonder whether that might be a little bit early, because there's a few other bits and pieces out with a pound, like Carney, as you say, and all that sort of stuff. I mean, that might be enough to get us back to the downside. But the key factor is that vote in the Commons. Can Theresa May get her Brexit deal through? And that doesn't really happen until the 11th. So
well, we've really got to settle into that, haven't we? Because
I think
the market's definitely not expecting a victory for her there.
No. no, absolutely not. And that's the point, isn't it? Is that if we know the market doesn't expect a victory, we know that the sell with a pound is on. We just got to get a decent level, and
Yep.
I suppose hope that that nothing else comes around that that stops that stops the move to the upside before we get close to that deal. But that's what I
Yeah.
quite like. I'd like to look for the selling opportunity with a pound. But
Yeah, look,
but as
I
you say,
think the sooner the better, I reckon. As soon as there's a technical reason to get into that, I'm in. Because I think by the 11th, it'll be too late. The move will have been
oh,
made by then.
undoubtedly, undoubtedly. I'm just wondering whether anything before the 7th would be a bit early.
Yeah, well, I think the answer to that for me is if I see a technical reason to get in, I will, and I'll keep getting in if it keeps getting knocked over.
I suppose that's the other thing, isn't it? Would you get in and hold? You know, would you just get in a you know, similar to what I will have to do with the foot? If you know, if the FTSE comes down to that gap, I'm not going to wait for it. I'm not going to wait for a reason, a setup. I'm just going to get in. You know, this
Yeah.
this price. I am just going to buy it. I don't care what I see. I'm just going to buy it here at 70.68, 70.70. So if this comes down 30 pips, I'm going to trade it.
So you're young, you see. You've got youth and exuberance on your side.
Yeah.
I like that. Bravado, it's called. I've just got old on me on my side, and it tells me to wait.
There goes the market. So we are open. The FTSE 100 is open, and the buying is currently. Well, it's flourishing right now. It's certainly not looking like it wants to subside. I think we could have an amazingly bullish day in the FTSE 100. But do you know what? I am young and stupid. Well, relatively. But I'm still not stupid enough to get in here. Well, whether that would be stupid or not, I don't know. But I'm not exuberant enough to get in here.
It's a dreadful price. Dreadful price.
Yeah.
Doesn't mean it won't go, of course, and you couldn't make money out of it. It's just not a really good buy right now.
No, and you know that the one of the reasons I don't get in at these levels is that I think it's really bad practice for your head. To do that, because the issue is that you kind of, if you'll do it once, you'll do it again, and it'd be that time that you do it again that you just get run over. So you know, the only caveat is that there's a very, very strong reason to get in here, but you know, I think it's just one of those that have to remain conscious and just sort of say, well, what can I do?
Yeah, look, you know, that's not strictly true either, I suppose. When, you know, to be fair to people who have a reason to get into the market now and have a genuine, I don't know, setup, if you like. So the rule might be every time I see a gap after a major announcement that goes through resistance, then I just get in the market. If you've got a reason like that, if that's part of your strategy, then absolutely, you know, go. But you know, if your strategy doesn't allow for that sort of thing, then you have to play by your strategy, as you say. Otherwise, you're going to get into a bad habit.
Yeah.
Or maybe you can add this particular scenario to your strategy. Who knows? You know, if you see that 100 times and 51 times it works, then why not?
Yeah. I think my issue with getting in at places like this as well is that, you know, we know it's the big players that move the market, and my question always is, why would a big player want to get in at what could be potentially the worst possible price? You know, that they play the same game over and over and over again, where they create liquidity and just get in the market. But you know, the other thing is, will there be enough sellers here for there to be enough orders to be filled?
Yeah, they've got to drive the market a long way to find liquidity potentially.
Yeah, yeah, absolutely, absolutely. So I'm just going to wait and see what happens. We'll wait on that. We'll wait on the pound. But right now, there's not really a lot we can do, is there, mate?
Well, let's have a look at some currencies, shall we?
Yeah, let's do that. Yeah, let's see what you got with the euro, and there might be an intraday play possibly at some point.
Yeah, not that keen, but let's have a look. See, the thing is with the euro and the pound versus the Aussie, for instance, which are the three majors that I look at. As I said, the Aussie's taken off and put in new highs, whereas the pound and the euro, not so much. In fact, all we've really got is, at this point in time anyway, a little inside bar that is slightly bullish.
Yeah.
It's really not the candle. Although, when you think about it, why would the euro and the pound actually rally substantially on the back of a freer trade? I won't say a free trade agreement, a freeing up of a trade agreement between China and the USA. That's probably the question I'm asking myself now. You can definitely see it with the Aussie, because the Aussie absolutely benefits by that, and we said that on Friday. If the deal is soft, or if Trump backpedals or whatever the case may be, then the Aussie is definitely going to rally on that. There's no question. But these two, the euro and the pound, not so much. They haven't got as much at stake as does the Aussie dollar. So, and that's why we're seeing probably a more mooted reaction to those pair than we are the Aussie. And when I say mooted reaction, of course, we drove down fairly hard on Friday. Before that, and that says to me, the Aussie. Have a look at the Aussie. That didn't drive down so much on Friday. Drove down a little bit, but not so much. It came off the bottom fairly quickly, or it reversed fairly quickly, but not so much. The pound here on Friday, I guess it did rally at some stage, but it then drove back down. So, the momentum and exactly what we're just talking about is it's definitely under pressure. There's no question it's under pressure. And now this little rally on the back of what Trump and Xi Jinping, whatever his name is, actually came across. Sorry?
Xi Jinping.
You can say it right.
Yeah.
Well done. I'm not so good. See, old fella. See, again, can't get this new lingo. So, to me, the pressure still remains on the pound most definitely, and the euro to some degree, whereas everything has changed for the Aussie. Everybody's now looking rosy for the Aussie, which is a shame, because I wanted to buy it down here, not up here. But that's another story. So I guess, put those two things together. If you're trading the euro against the Aussie, or the Aussie against the pound, then you'd probably be fairly confident that, and the market's done exactly that. The euro versus the Aussie has dropped. I don't trade pound Aussie, but let's have a look at it anyway. It's there, exactly the same scenario.
Yeah.
The interesting part here for mine is that the pound has rallied against the Aussie to a substantial degree, and well, I won't say it's almost closed the gap, but it's getting towards that way. And the euro versus the Aussie, not so much. So I'm really not getting a great read across these currencies at all. I would have expected the pound to be doing worse against the Aussie than the euro is, but it's not the case. The pound's actually doing okay against the Aussie.
Yeah, the pound is doing okay. I mean, I wonder whether that's because, and this is I think one rule of fundamentals, which is always key, is that before you know anything, the likelihood that it gives way to some big technical levels becomes less likely. Not impossible, but becomes less likely. And I guess the thing with the pound is that it's bounced off a key level down there, and we got a very important vote. So the pound is in a little bit of a kind of a holding scenario, isn't it? When what's that one there you got?
That's pound. That's cable.
That's cable, yeah. I mean, if
So-
you sort of like take that trend line from the 6th of August, I mean, it doesn't quite doesn't quite touch down to the trend line, but it's pretty close. 6th of August, and then the 20th. No, not the 6th of August. Is that on the 9th or the 10th?
But I'm here.
That one, yes. The next low around about the 26th of October. Yeah, I mean, it got fairly close down there. There's certainly a level of support that we can see on the daily charts as well, triple bottom down there. So, you know, I suppose the pound bouncing before we get anything significant was always going to be likely, and it's interesting because when we think about what drives these currencies, what drives the euro and the pound is you know, it's going to be different. Well, what drives the Aussie is fairly evident. We know that the Canadian dollar is driven by oil. We know that the Aussie is driven by you know, amongst other things, you know, global markets and how well global markets do.
China and commodities, yes.
Yeah, China and commodities. So we know if China and commodities are doing well, then we're likely to see a pickup in the Aussie. But with the pound and the euro, it is different. And this is the thing about the euro. And I suppose this is why I think that if anything is worth looking at against the dollar, you know, with a potential rate hike, we don't know what's going on quite yet. But with a potential rate hike, then it's probably the euro. You know, what's going to drive the euro higher? And I haven't really got a reason at this particular stage for the euro to be driven higher.
Well, unless the market perceives that whatever happens on the 11th is good for the euro.
That's yes.
That's the only thing, isn't
Good
it?
point.
Really,
Yeah, good point.
That's the elephant in the room right now.
So back to Brexit.
Yeah, afraid so. I mean, I don't think it's going to matter too much what happens with NFP on Friday. When is FOMC, by the way? That's a good question.
I thought it was the 14th, but let's have a look. Where's my...
See, if they don't go and the market perceives the 11th to be good for the euro could go big time.
Yeah, yes, it could. It could. I mean, I don't know why it would be perceived as good.
Well, I don't know either.
Because you know, as I said before, she's unlikely to get it through. But this is Theresa May, and she is so resilient, and she's pretty popular. You know, within her party. For whatever reason, you know, for the reason that nobody else wants the job, or that they, you know, they want to get behind it. I don't know, but she's you know, she's an old hand. She's been around a long time, Theresa May, in very important roles, and she's a very loyal operator. And she was incredibly loyal to Cameron, and you know, and all prime ministers that she's served under, she's been very loyal. FOMC is on the 19th, so it's quite late in the day.
Right. Okay.
Or late in the picture, I should say.
Just before Christmas, 1 week before Christmas. Wow.
Yeah. That's either going to be very good for people or very bad.
Yeah. Look, what are they forecasting? I haven't got that up.
Well,
yet.
It started off that they were forecasting the rate hike, but the forecasts aren't out yet on Forex Factory. I think it's a little bit in the balance. I mean, the last I heard was that there was less of a chance that we would get the hike from what was initially predicted, but it is a little bit in the balance. I think
they're not saying they're not going, but they're saying it's what was the word there? I can't remember now. We're at the bottom, or we're at the limit of the cycle.
Yeah, it was kind of weird. It was a strange statement.
Yeah.
Let me see if I can bring it up. So,
suggesting, of course, that there may still be one, but that's it. That was the suggestion that I read out of, or read between the lines, if you like.
Yeah. So Yeah, that's exactly it. Minutes. All right, let's have a look. FMC minutes can be viewed.
I should have the webcam on. I've got 2 end of the rainbows in my front yard here.
Oh, really?
Pretty cool, eh?
I've got a webcam. If you wanna start webcamming.
I better trade something. It's supposed to mean a pot of gold, isn't it?
Come on, Pound,
Gold.
get
So
up.
we look at gold. What do we do? Do we sell
Oh
gold?
yeah, let's have a look at gold. Actually, yeah, that's a good
It's
point.
just gone. It's taken off.
That's taken off to the upside as well, is it?
Yeah.
It is interesting sometimes,
And
isn't it?
going nuts today.
It's interesting what moves these markets at times, and this is this is the always going to be the tricky thing. If you're not quite party to your own specific market or currency pair, then the technicals do become a much trickier play, in my opinion. Where is gold?
12.30.
12.30. I can't find it. Where is gold?
Through the recent highs too.
I see it. Yep. Let's see. Yeah, that's gone through the recent highs. And what was the play on gold? Let's see. Again, it's interesting that that gold did actually give us a little reversal bar, but this particular bar has just got no context, is it? It's kind of in the middle of nowhere. You wouldn't buy off the back of that bar per se. Yes, the context is there with this one because of the G20, but that bar in itself doesn't give you anything. Doesn't really give you any scraps to kind of feed on.
If you have a look at the 4-hour chart on that and go back to Thursday, gee, you got to be a seller there.
Back to Thursday, which is what date was Thursday? What are we on now? It's the 3rd.
You would have got a bit out of it too. Actually, I think Justin traded gold short on Thursday or Friday and got some money out of it.
Right.
But yeah, that quickly reversed, didn't it? And it's interesting, But are we risk on or we risk off?
Well, we're certainly risk on. Where gold is coming to play, I wonder whether that's just a bit of a hedge.
Maybe.
I mean, certainly looking at the weekly chart with gold, the weeklies were pointing for some upside, I think. If anything, well, even that is a difficult read. I mean, yes, we kind of looked like we created a higher low down here, but that particular bar wasn't particularly sexy. It could have quite easily started to fall back down again.
What are you looking at the weekly?
Yeah.
Yeah. Also at a resistance level. Yeah, it's not an easy one.
No, that's just not clear at all, is it?
Well, tough to trade that, but if you want to trade that weekly bar, that is a reversal bar, 1, 2, 3 weeks ago. Big risk for little reward there, really. Tough to trade.
Absolutely.
Tough to trade gold, but yeah, interesting. I tend to, if gold's going well or poorly, there's generally something happening with the Aussie as well. It's very, very closely. If you look at historical charts, you'll find that the Aussie and gold aren't too far apart. There's a correlation there for sure.
Yep.
And the Aussie generally lags, which is
right.
Cool.
Yep. Yeah. Jeez, this was tough. This was tough. God, you just can't blink, can you?
Well, we've been speaking about this for some time, and this was very much the case with me on, when did I trade Euro Yen? I can't remember when I got into it, but maybe on Friday. I set the trade on Thursday, didn't I? In this show, maybe.
Yeah.
And it triggered on Friday. Went to TP1 on Friday very quickly, and you're entitled to think, okay, there's a chance here, depending on which way this G20 goes. But this is, to me, the very essence of what's going on in the last, I don't know how long, 12 months, 2 years, where the market simply won't run. It'll get to a point, and it either it's a technical point or a fundamental point that just turns it on its heel, and in a way it goes in the opposite direction.
Yeah,
I find that is very, very common these days. Whereas, prior to whenever you draw a line across that, these things were trend setting. These particular announcements or decisions or whatever they are were actual trend setters, where the trend would actually not just reverse and take however long to get to resistance, like you're seeing there now is that the FTSE still? Yep.
Yeah.
That would then start a trend, which would now be long, right? So we'd see that go on for some time. But I don't trust the market anymore for that. I think we will hit resistance, and then we'll pull back, and maybe even go deep into the retracement.
Yeah.
I find the market so often, and I think that's potentially computers trading it back. They call it mean reversion.
Yeah.
We revert to the mean, and I'm seeing that time and time and time again.
Yeah, I mean, the interesting thing as well, I think, is that the fundamentals seem to be playing a much bigger part now, and I wonder whether that is because social media and the way that we now mine for news is just so much more prevalent than it ever was before.
Yeah, everyone's on top of it.
Yeah, everyone's on top of it. So whereas before the kind of technical aspects of the market might play out a bit more substantially. If you're not on top of the fundamentals, if you don't know why the market is moving, then you can get in a lot of trouble with trading with just technical patterns. Because as you say, you get to a point, and I'll give you another example of that. The CAD yen was a really, really good technical setup, which I traded for a bit. But you look at this on the charts here. Maybe less so a little bit on the weekly, but even the weekly, when we sort of like consider some of these lines, it kind of come through this area. Whether the pattern is probably down there is a little bit questionable, but there's enough of enough touches here to suggest that there was a possibility. Let's just angle that up. There's the touch there, touch there, touch there, and then when we come down to the dailies. The dailies were suggesting that that we were through kind of these levels here, with this particular low here, and a flat level off there, and then we start to get some lower highs and lower lows on the 4 hour, starts to come down, but it doesn't tank. It just kind of like flicks forward and then it's off, because the fundamentals are for Russia and Saudi Arabia to have still been mates, and as soon as people find out they're still mates, then it's off to the races again. And and this is the thing, and I suppose you've got to be on top of the fundamentals, but to trade these particular fundamentals would have been so difficult because it's really speculative. I mean, I know the market is speculative, and maybe more often than not, you speculate on something like this and you make money. But if you're wrong, this has cost you a hell of a lot of money. And as I say, that's the tricky thing. I mean, for us, I suppose we are fundamental analysts that come from a technical background, which is still a really good place to be, because it just means that
we'll have to stop you there. I'm not a fundamental analyst. I'm just tagging on to what you say, buddy.
Well,
I I have my own opinions based
Yeah.
on what I read and see,
Yeah.
but I'm certainly not a fundamental analyst, that's for sure.
Yeah.
I definitely take note, because
Yeah.
you'd be a fool not to,
Yeah.
because
Yeah.
that really what's driving all these moves. There's no question about that. But they will
Yeah.
go to a technical level, and that's what I think is excellent, as long as you're not relying on those fundamentals to make your money. I think that's quite a reasonable approach to take. Rely on
Yes.
them to get you to a technical level. Yes, definitely.
Yeah. Yeah. Yeah.
But it's toss of a coin sometimes as to which way these things are going to go.
Yeah.
So I'm, we spoke about this last Tuesday actually, with all the fundamental things that are going on day in, day out, and the market is going to react to them. There's no question. And if you're ignoring them, as you say, you're probably going to get into a fair bit of strife.
Yeah.
But at the end of the day, when we look back next week on this move that we're seeing as a result of Trumpian Xi Jinping, if I'm close, not
That's it. Yeah, Xi Jinping. Yeah.
We will see that move went to a technical level and then stopped and retraced.
Yeah.
We'll see that almost for certain.
Yeah.
And that's why we say, it's exactly why we're saying, if we're prepared to wait, we will get something that we can take away, we can trade, and it'll be a far less risky proposition than it would be jumping into the market right now on the back of what we think is going to be a strong move.
Yeah.
And that's the point for me.
Yeah. Yeah. Yeah, and it's well, and this is where I think the whole fundamental picture becomes key, really, because as technical analysts, we are trained in a strategy that follows the technicals. But I think, as you quite rightly pointed out, and probably quite astutely pointed out, the markets aren't behaving well. They're behaving at technical levels, but rather than continuing, to try and get continuations, that's the tricky aspect of it, and this is where the fundamental aspect comes into play. And I think our job and our challenge as evolving traders is now, how do we involve the way that the market is changed into our strategy? Because it's not that the strategy doesn't have a place. It's just that the strategy now becomes but based on something else as well. Because it was always the thing with the euro. The reason that people loved trading the euro dollar so much was because it was a really technical chart. Because the amount of people that were involved in the euro dollar, it meant that it would do things that were quite foreseeable to a degree. Whereas something like Bitcoin, being kind of so new, doesn't have that same draw. It's not so key with the technical aspect of it. And I suppose that this is the thing: is our challenge from here on in is how are we going to start now involving our the fundamentals and the sentiment into trading, that gives us a chance to actually make money out of the market, because we are able to adapt. Because and this is the market will forever evolve, won't it? Because of robots.
Yes.
Because of the way that more people can get involved, because of news, because of Trump, because of Brexit, because of war, whatever else that there is out there on the table, because of the sentiment cycle, because of the business cycle, all these different aspects kind of come into play, and our challenge is how we adapt to those aspects. What is going to be the key things that we're going to follow, and what I find fascinating about all these arguments is that if the market goes in your particular direction, you can make a case for a particular approach. For example, the FTSE 100 tends to rally up until around about the 2nd of January. Now, that means that if you just get into the FTSE 100 to the upside right now, you're going to be making money. But what if Trump hadn't done a deal? What if he had dug his heels in? What do we know would have happened at that point? And we know that the market would have minimum gone nowhere. It's not going to have done this if there was no deal. So then what do you do about the sentiment cycle? So you can use the sentiment cycle as part of your trading, but there's not 100% certainty that the sentiment cycle will work. In fact, it's around about a 66% certainty on the FTSE. But I would say that there's 100% certainty that Trump doing this deal, this would have happened. Yep, but the only thing is, you're still speculating, aren't you, that he's going to do it?
You are. But if you have that fixed firm, well, I won't say belief, it's an opinion.
Yeah.
If you have that fixed firm opinion, as I said before, you're entitled to actually speculate a small amount of money, because the reward, if you're right, is probably going to be substantial.
Yeah.
And look, I don't think that's wrong as a strategy, but you need to set it aside from your other strategy.
Yeah.
It's not part of your strategy. Your core strategy, if you like.
Yeah.
So I don't see anything wrong with speculating a small amount of money at strategic times.
Yeah.
And those strategic times, and I think this is exactly where we're going with this conversation. These strategic times are with us regularly on I won't say daily basis, but certainly on a weekly basis. If you're prepared to sit down and say, well, okay, this week we've got X, Y, Z happening, Aussie interest rates, who else is going? Probably the CAD's going as well. And they're forecast to rise, for instance, if they were. I don't think either of them are, but if they were, then it's not rocket science to consider that the market will like that. And in the lead up to that, just like we spoke about with the pound earlier, our bias is most definitely short. And if we can get into that until this fundamental announcement is made, if we can get into it in the direction we believe is going to be the case, I see absolutely nothing wrong with that. And if there's a technical reason to back that up, then maybe you can even put a little bit more into that particular trade.
Mm-hmm.
But potentially that's where you're going to make a good amount of money. But the thing is, when, as it turns out these days, I'll say these days, when these announcements are made, as I said before, they used to turn the market into trend. Now I'm not seeing that. Now I'm seeing it go to a technical level, and something fundamental that negates what's just happened, if you like, drives it back in the opposite direction. Now, that won't go on forever. Yes, there will be trends begin, and yes, there'll be trends go on and on and on and on. But gee, they're not common, and they're not as common as they used to be, in my opinion. We're seeing a lot of markets pull back very, very quickly off what you would think are absolutely outstanding opportunities for the market to trend, and it's just not happening. So the summary of that particular part of where I'm at is trade most definitely your strategy as you would normally trade it, but take just a little bit more off at strategic levels, because I think if you're prepared to take small pieces out of the market at decent risk, so in other words, if you're hitting a resistance level where you'd normally take TP1 and get 55% off the table, what's wrong with taking 80% off the table? Because really, at the end of the day, if you're trading intraday, you're not getting super good value with runs. You're getting good value to resistance or good value to support, and the likelihood of going through those levels has decreased, in my humble opinion.
So I've got another question then. So do you remember when we were in Bali? The two of us were looking at that euro dollar trade.
About Bali.
Well, we were both looking at the euro at one point, and I think we both picked out the fact that the daily pivot would be a great place to get in.
Yep.
Now the question is, well, I can't remember why we thought it would be a good place to get in. I'm not sure what our reasoning was. I'm not sure why we were going long. That was the thing, but we had a reason to go long. So my question at this point is, strong reasons to get into a market become more obvious to the market, which means that they're telegraphed. So how weak a reason technically can you follow to get into the market, or how weak a reason do we maybe need to employ to get into the market now? Because again, back to this FTSE. If I come back to this FTSE again, this FTSE 100 is obviously given us a really good run to the upside. Now, if I think about my my particular strategy, now there's no doubt about it that the strategy still works, but my particular strategy would involve one specific thing, which would be to take a lower high off an hourly chart. I'd want to see a lower high, and I'd want to see my RSI kind of do something specific. I'd want to see it around about the 50% mark. That'd be one of my metrics to look for, around about the 50% mark. I want to see it come down and back up and test that. So that's a setup.
Yep.
Now that particular move would have created something, but that particular move did not create enough of a trend to ride. And if I'd managed to kind of get in here, let's say I've taken profit of the next potential low, which would be there. So a best possible price, and let's say I managed to get the break of this bar, or even the break of the body of that bar. So I've managed to make myself 37 pips. So I'm halfway in, and my stops are going to be just above this particular level there, so just above the bar. But then what's happened is it's come down here, and from my entry to where it gaps to, it's cost around about 31 pips. So it ends up that the trader's made nothing. Even though it was a nice run to the downside, the trader's made pretty much nothing. So my setup, as good as it was, actually wasn't as good as a weak signal down here that there's support. So the question really is, how weak a signal can we follow to make money if we have a belief that the market is going in a specific direction?
I don't think you can have a long opinion there. If you go back, you can change there.
Yeah.
Depending on where you put but the level is up where you had it, in my opinion.
Up here. Oh, I see. Yeah, up this point.
Of that support. That's the level. Because if you go to the left of your chart, that's a beautiful resistance level.
Support, yeah.
Over to the left.
Oh, here.
Yeah.
Yeah, no, well, that's the interesting thing. You see, the actual level was here. That's the actual level, and when you look at it, it's there, and it's there. So the actual level, yeah, and I tell you, the only reason I know that for sure is that I was watching this market at this point. There was a daily pivot bounce at this point, and actually the 79 it was actually 79.90 that I was watching on quite a few occasions as a potential bounce line, and it did bounce. So when it came back down again, this was the level. But you get in here. Maybe you managed to get in something along this bar or something, and then you put your stops down here. You've been taken out again.
Yeah, look, I'd argue that level. If you put that back where it was, where you had it.
Yeah.
To me, the correct, sorry, for me, the way to judge the level.
Yeah.
And everybody's different. Everyone's got their own opinion. Is to judge how often it's been both support and resistance.
Yeah.
And how far that support and resistance moved the market.
Yeah.
So that resistance level on the extreme left of your chart moves.
Okay. Yes. All right. I get you on that one. Let me just put this level back here again.
And mind you, it's a tough call because they're both. There's a case for both of those.
There is, but let me show you something. When you actually come down and you look along, this level doesn't play such a key part. You sort of you're looking here.
Yeah,
you're looking here.
Yeah,
Exactly, and that's why. Yes, there was something here. The thing with this level is that it was the higher end of a support line. So I suppose a way that you would play that, and this is what I'm saying about the question is, how much you trust yourself. Because
Yeah.
let's say we don't trade on technicals. We well, we do, but we trade on, and this is what I'm much more interested in these days, I suppose. I'm much more interested in looking at a price rather than the price action, because I think the price action has told us that this level is important. So why do we need a setup when it's already told us the level is key here, 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 here? You know, we could go back here, here.
We could,
here.
but I think the real answer to that for me is yes, we know the level's there, but we don't know whether it's going to be support or resistance.
Well, okay, but when price is above it, we know that it's support.
We know that it's likely to be support. Yes.
Yeah. Yeah.
And this is the game I play all the time.
Yeah.
Not off horizontal levels, but off trend lines or trade lines, as I call them.
Yeah.
You know, I'm playing that game all the time. Yes, I expect that to be either support or resistance. So I'm looking for A, a bounce, or B, a false break.
Yeah.
Or C, there's three things that can happen at a level. One is it'll bounce off it. Two is it'll break. Three is it will false break. So I'm looking for all three of those possibilities at a particular level. So for me, I don't know what is going to happen at that point. I've got an idea.
Yeah.
Because the stronger the level is,
oh mate, you know what?
More likely it is to be.
This is the key with all of this, isn't it? Because I make you absolutely right. You know, I am obviously I can't think of the word, being well, I'm playing devil's advocate, you know, because you know, I guess I know the answer. It's just that I'm just interested to have the discussion, because the thing with it, for me, is that as soon as this breaks down, I mean, it hasn't broken down significantly, but as soon as that breaks down, the level could be perceived as giving way. And if the level, because you know, forget the lows. I'm much more interested in close prices than anything else. You know, and specifically because that low was below this area, so it starts to become much more tricky. So you've got to trust something. You know, you're going to trust the low, you're going to trust the close price, and I trust the close price because that's the much more significant thing for me. And the reason that becomes significant is that the market dips, closes above. You got a rally. The market dips down to the second one, but manages to close on top of it. Dips, closes above. You got a rally. It dips, closes above. You got a rally again from that point, but at this point it closes below. So all of a sudden the questions start to arise. You know, how can you justify this as a potential price point? And I don't think you can. Which starts to make the whole question of how you trade this specific area here very, very difficult. You know, the area becomes very, very difficult, because that's what we're doing, isn't it? What we're doing as technicians is we are looking and finding our levels that we want to trade at, and then we want to see something specific at those particular levels. And I suppose my question is how much we have to adapt our specifics, because when we saw that euro, and I'm gonna see if I can pick it out. I'm going to see if I can go and get it.
It's on the. I've still got my mark on there. It's on the 13th.
On the 13th, great. So, I can't get rid of these. Let me get rid of that. The 13th. Now, when we saw this on the 13th, this was the point here.
Yep.
Oh, that's the 14th. So it's the 13th. It's this point here. That's correct. That? This is the hourly.
Hourly.
Yeah.
I think I traded on before. I'm not sure. Can't remember. But it had come down and tested the daily pivot.
Yep.
As it has there.
Yep.
And I was long, I can give you the exact level, at 130.109. And it was on a 4-hour chart.
131. Okay, so this is really good case in point. Right, so but this is really good case in point. Both of us picked this. Both of us did. In fact, you know what? I've got a feeling it was the 14th because I remember seeing these two bars.
Hang on, I'll give you the date. The date is the. Hang on a second. You're right, the 14th.
Yeah, it was the 14th. I remember seeing these two bars. So what we do have, and now we know both of us can read charts, both of us can read candles, and what we have here is a holding bar. So if we both said daily pivot bounce, that's what we're looking for, a daily pivot bounce.
Yep.
Why are we not backing ourselves to go 2 bars is enough? One bar is enough.
Myself, but I just didn't trade at that level.
No, but this is the point.
Because I had a reason to trade at a different level.
You did, because your strategy told you that that's the level to get in. But you still had to sit through all this.
That's right. Your point is absolutely valid.
Yeah.
You know, why didn't I at least take something into the market at that point?
Yeah.
Even if it's a little bit, and then scale in at my perceived level.
Yeah.
Or my core strategy level. It's a great point.
And the question comes in: how many times can you get in here and make that little bit extra, and maybe even get those stops a little bit safer, a lot easier? How many times can you do this over waiting to make your trade work? Because this is where the money is, isn't it? The money's here.
Well, yeah.
I mean, you know, imagine if you got in.
Had a differing opinion on that, because that is riskier, in my opinion.
Yes,
because
it is riskier.
It hasn't been confirmed.
But let's say that we have our stops even down to that point there, 20 pips. Now that went.
Yeah, look, great trade. Absolutely.
10 cents to 1. So my point is, what is the definition of riskier? Is riskier because it is less likely to work out, or is riskier because the risk to reward ratio when these do work out doesn't stack up? Because if we look at this one, that did stack up. So
and they do stack up.
Yeah.
Because as always, you know, if you're prepared to take higher risk,
yeah,
you're going to cop higher reward.
Yeah.
You know, that's the law of finance.
Yeah.
Or of economics, if you like.
Yeah.
You know.
Yeah. So and you know, this is what I'm much more interested in, you know, because the two of us, you know, whether you regard yourself as a fundamental trader, which I appreciate why you say you wouldn't, you still have a handle and a decent understanding of what is moving the market. So if we both have that understanding, or if any traders out there have an understanding, why do they need to wait for that setup, which is going to cost them money?
Yeah, look, I can't argue that point. The point's absolutely valid, and if it does stand out like the proverbial dog's balls,
yeah,
then you're entitled, as I said before, you're entitled to, and I don't, because I'm just ultra conservative. It's part of being old, as I said before.
Yeah.
But you know, you can talk me into this, Ash. You can actually talk, because I see the value in it.
Yeah,
I absolutely see the value in it.
So we've got.
If you do have that strong opinion backed up by, it doesn't matter what it's backed up by, as long as it's backed up by something that's substantial, rather than toss a coin, I think it's going this way.
Yeah.
You know, if there's valid reason to believe, whatever that reason may be, as long as it's valid, then I absolutely see nothing wrong with just putting a small amount in the first place, and scaling into it at the level that you thought it was going to enter initially. So
in that case, I think.
Sorry, you go.
This is our next trade.
On cable.
On cable. This is our next trade. We both have a reason to suggest that this is going short, right? We've got this Theresa May vote that has to get in the market. So we both got a substantial reason to trade cable short. So our next trade is going to be monthly pivot. I don't know what we need to see. I think we need to see something, and this is what I'm saying. Let's look for something weak, but enough to suggest that the market reverses at that point, and let's get in.
Yeah, look, my next trade I think is going to come earlier than that, because I can see something setting up on the euro at the moment. We'll get to that in a minute. But yeah, look, you've kind of got me. I'm intrigued by this. This is wonderful. I like it. I like it a lot. You know what happened with that euro trade, don't you? At the end of the day.
No, what happened? I can't remember.
Yeah, that's when Buggerlugs resigned.
Oh,
It was
Buggerlugs, did
starting.
he?
I can't remember what's the chief negotiator. Chief
Oh, that's
negotiator.
right. Yeah, that's right. Dominic Raab. Yeah.
Yeah, and we were all saying, "Oh my God, this is the end of the world. This is
Yeah.
going short."
Yeah.
You know, and I'm in long, and I moved my stops to entry. So, I actually made money on the trade, and then I put the trade back in the market. And for the life of me, I don't know what happened there. Why I didn't get back in, I don't know. But I didn't.
That was a tricky one actually, wasn't it? Because yeah, with Buggerlugs resigning, you would think the euro would go short, and it went. And this is the you know, and this is the big thing about the fundamental aspect, isn't it? Is that in a way the technicals won on that particular occasion.
Well, in more than a way,
Yeah.
they actually overrode what was going on.
Yeah. So where you know where do the fundamentals win and where do the technicals win? Because I think that fundamentally I think anybody would be more than justified in looking for a short in the euro after that particular thing happened.
Yeah,
But
look, if I stayed put and did nothing, I won't say I'm still in that trade because I'm probably out at the weekly pivot, but I'm certainly out of a fair bit of it at the weekly pivot. That's for sure. So look, you can get tangled up in it. There's no two ways about that. And I think if you're in a trade and you've got a good reason to be in the trade and you're free trading, I'm not sure you should mess with it anyway. If you're not free trading, then you're still at risk. Absolutely protect yourself because that's number one. This game's all about having money to go on with. You don't want to wipe yourself out.
But what about your free trading and then this happens?
When that happens,
yeah,
and it goes beyond your price.
Yeah.
If you're free trading short,
yeah,
I mean, yeah, look, you've got an issue.
Yeah,
you've definitely got an issue. There's no doubt about it. And that could have happened. That could easily have happened.
Well, that would have happened to some. I mean, that would have happened. Like this is a CAD yen. That would have happened to some because, as I say, there was a perfect trade with the CAD yen. You know, if we look at, as I say, but back to these longer term time frames, and we see the actually can't look at it on this chart. Let me put this one over here. That's really my chart for that point there. This is the perfect trade if we look at this. Interestingly, there's a short on the FTSE right now as well. Right, so yeah, but back to the CAD yen. Perfect trade. Again, daily chart. You get the lower high here. Pretty nice horizontal level at that point. Good horizontal level. Even on the weekly, it looked like there was some resistance up here. Pretty nice resistance up here. So there's the weekly chart. You get this particular bar as well, which suggests some downside. You got a daily chart coming down at this point. You're starting to get your 4-hour triple top. Even if you sort of like you're trading down at this point here. In fact, that's when it would have been. Yeah, it would have been there, wouldn't it? So nice, lower, low. So you would have had this one, and mind you, I suppose if you got in early enough, it would be fine. But even at this point, this is still trending to the downside. So people would have probably got involved here, and then all of a sudden they wake up in the morning and boom, and potentially that's a losing trade. But
yeah,
I guess
in that regard, I got fortunate with euro yen, I suppose, because it actually did jump my stop, my trailing stop.
Yeah.
But then traded back to it. So fortunately. And it's probably going there again now anyway. So it's not the end of the world, but it could have been. That can be costly. Absolutely can be.
Yeah. So euro, you were going to talk about the euro. You said there was a potential.
Yeah, absolutely. Let's take a look. See, it's no longer the candle that I was hoping it would be, but it's still got another hour and a bit to go. So it could be exactly what I'm looking for. Hang on, I'll try and share the screen. There we go. So here's the thing. Getting back to where I was in the first place, there's an inherent danger here for a couple of reasons, and this goes to exactly what we were talking about before. I've got a strong belief that the euro will go short again, and there's a lot of reasoning for that. This bar here, and this bar here.
Mm-hmm.
They're all confirming the one thing, and that is price doesn't want to go above this level at this point. And
Yeah.
even the fundamental boost that it's had over the weekend, if you like, isn't driving it to new highs. So when I look at the 4-hour chart and I see ready, set, go, and I see a nice retracement back to this level here, which is last week's weekly pivot, Friday's daily pivot, DR1 today, and I saw a reversal bar there early, but it's kind of turning into a doji rather than that. But I think I'd still be prepared to trade it. So I think I'll put my entry underneath here. I'll take profit before the monthly pivot, but I do like the prospects of this going short. So again, that's getting back to where I was, or what we've been talking about. I haven't really got a slingshot set up here, my strategy set up, but I've got a belief that if price goes beyond this level, it's going to here at least, and potentially to here at least.
Yeah.
And as I said last week, if this does actually get beyond these lows, there's a bloody big gap underneath it.
Yeah, absolutely.
So I'm still with that opinion, and I see absolutely nothing on this chart to suggest, apart from that bar there, maybe where we actually did trade long. Apart from that bar there, all I'm seeing is every time we get to a level and bounce off it, we bounce back to the resistance and then come off it again.
Yeah.
So I'm still seeing that. And whilst ever I'm seeing that, I've got to give this big gap under here a chance. And if I'm wrong, then I'm not going to put too much risk on the table here.
Yeah.
But if I'm right, the reward for that risk is going to be quite substantial. And that's why I'm continuing to do this. And I continue to see bearish engulfing bar, inverted hammer, if you like, or hang, whatever that is, bearish engulfing bar, three black crows, and now a potential. If this would, in fact, I don't want it to turn red. If that would have turned red, that gets other people interested. I want to be the only one interested here, and people get interested here. You know, that's what I want to see. So yeah, I'm quite happy to trade that. If in 64 minutes time, this looks exactly like it does now, then I'll be placing a small trade underneath it. Then maybe if we get through this level and get a retracement back to these pivots, I'll look to scale back into it. So yeah, that's my, that's what I'm seeing already on the euro this week.
Yeah.
And our cable trade. Yep. Maybe we wake up tomorrow, or we get into the show tomorrow, and we see that cable's been to the monthly pivot and given us exactly what we want.
Yeah. Well, I'm going to trade that. I mean, I am going to trade that for to the downside. I don't have a reason for the cable to be trading up. And I agree with you. Don't kind of go in heavy. I'm not going to be risking 1% or anything like that. But I'm going to trade that to the downside. I'm going to trade it on a.
You'll get another chance to get back into it, or to scale into it.
Yes, exactly. All right, mate. Well, let's wrap up. I think we're sort of we've covered quite a lot of ground today, and I'm pretty happy with that. I think that there's a possibility that the FTSE 100 gives us a trade. I'll tell you that the trade in the FTSE now is for a short, but God, who would want to try and catch this? But it's come so far that the chance for a decent short here is definitely on. And it's at a pretty decent level as well. So I think that there probably is a short here, but really looking for a vicious short just so we can go long. So that's what I'm going to wait for, and I'll probably have to maybe slightly adjust my my first price. I'm just going to try and get in somewhere around about this high now here. So if it comes back to this point, then I'll put a trade in. So looking at around about 7,100 for a trade to the upside on the FTSE.
All right, mate. Cool. I'll also be looking at euro yen on the 4-hour chart. Similar scenario. If the candle gets any bigger, I won't be interested because we've got strong support underneath us here. We've also got the gap. So if I do get into one of these, it'll be the best setup that I find. It'll either be the euro or euro yen on the 4-hour chart. Definitely taking profit before the pivots on either.
Great stuff. All right, buddy. All right. Well, let's bid bon bouche to everybody, and I bid bon bouche to you. Happy trading, plenty of courage, and plenty of patience, and I think we'll be all right.
Plenty of courage. Do you know what courage is?
Courage. I no, but well, you tell me.
There's a brewery not far from me.
Oh, well,
courage. I won't have plenty of courage, but I'll have a little bit.
Yeah, maybe just a tipple. Tipple of courage. All right, buddy. All right, have a great day, and I'll speak to you tomorrow.
You too. Bye, everyone.
All right, cheers, guys. See you later.